Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs and I'll talk about the general trade setup, which does not look good by any scope, because what we're seeing is that the US market sold off, the Asian markets are on a sell-off, and the SGX Nifty is now indicating a gap down of almost 200 points. No doubt this is almost more than 1.5 hours to go for trade, but nevertheless a gap down is something that we can anticipate in trade. The trade setup for the ADRs was also extremely weak. You can see HDFC Bank was down 3%, Tata Motors was down almost 3%. So on an average, anywhere between 2 to 4% was the general cut that we saw as far as most of the ADRs was concerned. Dr. Reddy's was flat in trade. Now crude has seen a big sell-off. It's down for the 6th day in a row. Again, you can see it's down almost 0.8%. Brent is down almost 0.5%. So very close to the $60 barrel per mark. That's the WTI, and Brent is below the $65 barrel per mark. Surprisingly, the close on the commodities on the LME was not as bad as it was anticipated. So if you're seeing what the commodities did on the LME, most of them managed to hold up in trade. So that was the general cue that you're getting in. So aluminium was up 0.5%, zinc was up 1%, and lead was up 0.5%. But apart from it, the other commodities were slightly down in trade. Tin was the big loser, which was down almost 1.3%. Surprisingly, despite the equity sell-off, commodities haven't fallen so much. Copper is down 0.5%, zinc is trading flat, and aluminium and steel are trading flat in trade. So the commodity sell-off is not as intensifying as the equity sell-off. We're seeing a little bit of traction that's coming in onto the precious metal. All the 4 precious metals are trading with a slight positive bias. Yesterday's move, the FIs saw in the opportunity to sell off in the market. They sold in 2,200 crores in the cash market. DIs bought in a similar amount. So with this sell that happened, FIs have turned net sellers for the month, and DIs have turned net buyers for the month. They've bought in almost close to 5,000 crores in the cash market. Now, individually, how are the indices placed? Nifty moved up, it was up almost 100 points, but the mid caps and small caps outperformed. The Wix fell in 8% given the fact that the markets were moving up. And a couple of sectors that need to be spoken about. One of them was the PSU banking index, which was up almost 2.6%, and the Nifty Pharma led by Sun Pharma was up almost 4% in trade. Now the Nifty was up almost 100 points in trade. What aided? There was IT, so Infosys did well, HDFC did well. Sun Pharma, after a weak Taro number, fell in trade but managed to recover, and Reliance aided. But Indian Oil, ITC, Tata Motors were trading weak in trade. Agam, a 100-point gap up close yesterday, but today seems a different story.
Yes, it seems like today we'll lose those 100 points based on the indication of the SGX Nifty. But let's recount as to what's happened yesterday with respect to the futures. And as you can see, unwinding coming along. It's the same for the Nifty Bank futures as well. We have seen a decline in open interest, because of which we have seen a decline as far as the Nifty Bank futures go too. But moving in, the Wix has also again shown some substantial moves, so it has fallen. This is likely to move back up considering the opening, which as indicated by the SGX Nifty, not too much change with respect to the Nifty put call ratio, largely at around the same level. But in terms of changes in open interest, what we saw yesterday was a little more writing in the 10,500 and 10,400 puts, considering the fact that we saw the Nifty move higher. This picture is also likely to change today. That said, we're keeping an eye on ACC with fresh longs building in on account of strong earnings. Cipla similarly also with fresh longs coming in, with the stock moving up by as much as 7.6%. On the losing end, we had some weakness in Power Grid with a near 8.5% increase in open interest. But once again, all eyes will continue to be on the benchmark indices and what they do on the back of global cues.
Stock of the day is Parag Milk Foods. Now, good set of numbers reported by the leading daily manufacturer. If you look at the top line growth, we are looking at a jump of around 16% year-on-year basis for this company at a number of 519 odd crore as compared to nearly 446 odd crore that we've seen in the corresponding quarter. The company has reported net profit for the 3rd straight quarter at a number of 25 crore as compared to a loss of nearly 41 crore that we've seen in the corresponding quarter. Now, it's then also a profitability front on the operational performance of the company. EBITDA has come at 59 crore as compared to a loss that we've seen of nearly 18 crore in the corresponding quarter. Margins stand at 11.3 as compared to a contraction of 4.1 in the previous quarter, in the corresponding quarter of the previous year. So what has led to good set of numbers? Higher revenue and your cost efficiency line that has led to a good set of numbers. Also, if you look at the focus to drive value-added product segment has also aided the top-line growth of the company, along with a better realization, favorable input costs, as I've just mentioned, also aided the gross margins of the company. Now, if you look at the operational efficiency, this is where the benefit is creeping in from. The raw material cost as a percent to your net sales has come down to 62% as compared to nearly 95% that we've seen earlier. Other expenses too have declined down to 15% from 19% in the December quarter. However, lower other income has partially offset part of the profits that we've seen for this company. Now, other income has declined by nearly 19 crore as a 19% at a number of 2.5 crore as compared to 3.7 crore that we've seen in the corresponding quarter. With that, let's toss it over to Jayesh for commodity market updates.
Thanks for that, Nikki. So oil will be in focus because that has sunk to a 5-week low. In fact, one technical and one fundamental reason for that. Technically, it has now slipped below the 50 DMA for the first time in over 4 months now. And, yesterday we saw that the US output that came in at a record high. So WTI is now trading very close to the 60 per barrel mark. And in fact, Brent has slipped below the 65 mark. Now, WTI has posted its longest losing streak since April 2017. Moving on to the precious metal space, we are seeing some bit of stability come about for gold prices near the 1320 mark. In fact, palladium actually did not do well. That was down 4 days in a row and saw the worst sell-off in over a year now. As far as base metals are concerned, we saw mixed cues coming in from the London Metal Exchange, where the index itself ended flat in trade. As far as individual base metals are concerned, aluminium, zinc and lead closed positive, while on the other hand we had copper, nickel and tin which ended lower on LME. Copper, the decline was largely attributed to the inventory which jumped as much as 7.2% to the highest level since July last year.
Amongst the stocks that we're tracking today morning is Axis Bank, where it has sold 5% stake in NSDL for a total consideration of 165 crores. So watch out for Axis Bank. That apart, we're looking at Canara Bank as well, where board approval to raise 1,000 crores via mix of instruments has come in. We're also watching out for Indraprastha Gas. Now they have got an authorization for Karnal City Gas Distribution Network. So keep an eye out for that name. That apart, we're also looking out for Marathon Realty. There's a 2:1 stock split that the board has approved. We'll also see some impact of the earnings that came out, but this stock split also came in. Fortis Healthcare will be in focus as well because promoters Malvinder Singh and Shivinder Singh have resigned as directors. In fact, they've said that this is in the interest of good governance and also frees the organization from any encumbrances that could be linked to the promoters on account of the Daiichi Sankyo plea. So let's see how this one reacts. We're also watching out for some of the sugar companies, Balrampur Chini, Bajaj Hindustan, Shakti Sugars, etc. Now this is on the back of an ET report which says that sugar sales by mills have been capped for 2 months, which actually means that it is supportive for sugar prices. But on a day like this, when the SGX Nifty is trading about 2% lower, I'm not sure how much of an impact we will see. But overall, this is good news as far as sugar stocks are concerned. And lastly, on the back of Balti, we're tracking Triveni Turbines, where Reliance Capital Mutual Fund has bought 4.6% stake in a Balti yesterday, but Akash Prakash's Amansa Holdings has sold 4.7% stake, so we could probably see a downtick in this, but those are the stocks that you need to track and trade today.
Okay, a big earnings day today. Almost 6 nifty companies will report numbers. So we'll start with the oil and gas space because there are almost 3 to 4 companies in that space coming out with numbers. Samit, let's start with the upstream company, and that is ONGC. What can be expected from there?
So in the third quarter of financial year 2018, it will be the higher oil prices and gas prices that will aid the earnings of ONGC. Now, if you see, the domestic gas prices were revised from 1st October 2018 to $2.89 per MMBTU versus $2.48 MMBTU in the last quarter, while the Brent crude averaged around $61.4 per barrel versus $52.1 per barrel in the last quarter. So these higher crude prices with no subsidy sharing so far will result in a good quarter for ONGC. Now, if you see the headline numbers, the revenue is expected to be 24% higher to around 23,468 crore rupees, and this revenue growth of 24% will be the highest for ONGC in the last 25 quarters. Now, EBITDA is expected to be higher by around 47% to 13,400 crore rupees, while EBITDA margin is expected to expand to around 57% versus 48% in the last quarter. Now, net profit is expected to be 19% higher to around 6,100 crore rupees. Now, the reason behind a lower net profit growth rate is lower other income and higher tax rate. Now, if you see on the operation side, the net realization is expected to come in at $61.3 per barrel, which will be the highest in the last 9 quarters, while on the production side, the crude oil production is expected to be flat at 6.5 MMT, while the gas production is expected to be 4% higher to around 6.5 BCM in the third quarter of financial year 2020.
Okay, and a lot of downstream companies, the two large ones, that is HPCL and BPCL, they will report their numbers. So what can you tell about that?
So if you see, Indian Oil Corporation came out with a good set of numbers, but HPCL and BPCL are expected to report muted or a weak set of numbers in the third quarter. Now, in the third quarter, it will be the higher inventory gains that will be the only positive when it comes to the oil marketing companies. However, for BPCL and HPCL, this higher inventory gains will in fact, the weaker refining and marketing margins will offset this higher inventory gains. Now, the gross refining margin, or the Singapore gross refining margin, that is the Asian benchmark, was lower at around $7.2 per barrel versus $8.3 per barrel in the last quarter. Along with this, on the marketing side, if you see, the gross marketing margin earned on sale of every liter of petrol and diesel by BPCL and HPCL fell down to around 2.3 rupees per liter and 1.9 rupees per liter in this quarter versus 3.1 rupees per liter in the earlier quarter. Now, this fall could largely be attributable to the lack of increase in retail fuel prices during the state elections. Now, in fact, the profitability of HPCL and BPCL are expected to fall compared to the last quarter because of weaker refining and marketing margins. Now, the marketing segment will also be muted because of the digital discounts and because of the negative impact of GST that we saw in the third quarter. For BPCL, if you see the headline numbers, the revenue is expected to be higher by 21%, net profit is expected to fall by 12%, while EBITDA is expected to fall by 7%. Margins are also expected to contract to 5.1% versus 6.6% in the last quarter. On the operation side, the gross refining margin is expected to come in at $7.9 per barrel, while the refinery throughput is expected to be higher by 3% and sales is expected to be higher by 10%. For HPCL, the headline numbers, the revenues are expected to be higher by 22%. Net profit and EBITDA is expected to fall by 14% and 7%, while margins are expected to contract to 4.7% versus 6.1% in the last quarter. On the operation side, the gross refining margin is expected to come in at $7.6 per barrel, while the refinery throughput is expected to be flat at 4.6 MMT, while sales are expected to be higher by 8% in this quarter of financial year 2018.
Okay, many thanks for that, Somit. The next company that will come out with number will be India's largest financial lender, and that is State Bank of India. And Shraddha is joining me. Shraddha, what can we expect from SBI, and a word on the asset quality any surprises that can be thrown up here?
So Darshan, I just want to start off by flagging that we cannot compare the year-on-year reported numbers because the merger of the associate banks and Bharatiya Mahila Bank took effect only on 1st April 2017. So just want to share the Bloomberg estimates that we have. Net interest income is seen at 19,092 crores. So we should see a significant improvement there on account of the lower base effect. You also have net profit, which is expected at 2,059 crores. That's again an improvement as compared to the 1,600 crores sort of a net profit number that we had seen in the September quarter. Broadly, as far as the non-interest income is concerned, we should see a sharp dip on a sequential and year-on-year basis. Two reasons. One, because of lower treasury income or treasury gains, and also the absence of any extraordinary gains. Now remember, in the second quarter, SBI had made gains of about 5,400 on account of stake sale in SBI life insurance. As far as the loan growth is concerned, it's again expected to be muted below industry average. Remember, for the last 2 quarters or so of this financial year, they've reported a 0.5 to 1% sort of a growth. So at least it should pick up to a single-digit number. That would be something that the street would be watching out for. In terms of the asset quality, incremental stress is expected to be curtailed, but of course credit costs expected to be higher, so we will be watching out for the provision requirements for the NCLT accounts, and the management commentary on RBI resolution with respect to the larger accounts is going to be important to watch out for. We'll also see the movement in the watch list and slippages. The watch list number in the September ended quarter stood at 21,200 crores, fresh slippages stood at 9,026 crores, and of course we'll also be watching out for outcome of any RBI audit and if any divergence is there. But broadly, yes, again it's SBI, so comments on the entire resolution process and yes, asset quality.
Okay, so that's the number that's expected from RBI. Tata Steel will also report numbers. It's important to know what they will do it as far as the domestic operations are concerned and what happens on the international operation front. So Nikki's here. Nikki, what can we expect on Tata Steel as a consolidated, and a word on their operations in Europe and India?
Sure. So Indian business will continue to be in limelight, and European business have started hiving off. They've been in the process. Just to give you a rundown of what the basic numbers look like, revenue we're expecting a 17% growth on year-on-year basis for this company at a number of around 32,500 odd crore. In terms of EBITDA, that's seen higher by 46%, and we can expect a number of more than 5,100 odd crore there. And margins are seen at 16% as compared to nearly 13% in the corresponding quarter. The company is expected to report a multifold jump at 1,400 crore as compared to nearly 232 crore that we've seen in the corresponding quarter. In terms of the consolidated EBITDA per ton, we're expecting a 43% growth year-on-year basis and 13% growth sequentially to a number of more than 8,200 rupees. In terms of standalone business, which is an important one, we are expecting a 13% growth both sequentially as well as on year-on-year basis to a number of more than 3,800 odd crore. Higher realization and operating leverage is expected to trickle down in terms of the margin of the company. The volume figure, that's a key parameter again. The standalone sales volume is expected to show a rise of 4% at a number of 3.1 million ton due to the ramp up in Kalinganagar plant. And also in terms of EU volume sales, we're expecting a dip of as much as 8% sequentially. Now remember, it's a seasonally weak quarter for European market, and that number is expected to come down to 2.4 MT. Now two things or maybe three things that we'll keep an eye out will be obviously the Tyson JV that the Tata Steel has, and what is the progress on that matter, because we saw some labor unrest on that issue. Also the expansion plans and the cost pressures and the pricing scenario now in the steel industry. Darshan.
Okay, many thanks for that, Nikki. And finally, on the auto space, you have M&M that will come with their numbers. Now, as far as the preview is concerned, we are considering both M&M and MVML results that will come out. So, as far as the top line growth is concerned, we are seeing close to a 12% growth that will come in. On the bottom line, we are seeing close to a 26% growth that will come in, and close to 100 basis point improvement on the EBITDA margin. Now, what we've seen is that there was a volume growth of 7%, and that will aid the top line of the company. But the company has been giving significant amount of discounts, and that will something that could impact the margins of the company. The lower UV volumes and rise in raw material cost, that is something also that could impact volumes for the company, and better realizations in the tractor segment is something that could aid margins for the company. Obviously, the key things that we need to look out is the outlook that the company will give as far as UV and the tractor business is concerned, and what's the product pipeline for the next 2 years. So this is something that we need to watch out when M&M reports its numbers today. But there's much more in terms of things that much more news in terms of the steel sector, and Vishwanath joins us with more details on what's going on with the bids for Bhushan Steel now.
What we understand, Darshan, is about Bhushan Power actually. So there were bids that were solicited by the resolution professional in the case, and the bidding process closed only yesterday. So the two final bidders who've actually put in a bid are Tata Steel and JSW Steel. Both these companies have been pretty active in the stressed asset market. They have been looking at various opportunities. Previously, they've also put in bids for Bhushan Steel. That was about last week. So essentially what is coming up in Bhushan Power is that the liquidation value that was arrived at by independent evaluators is about 10,000 crore. That's the least recoverable value from the company, while the fair value is about close to 25,000 crore. So JSW's bid is at about 13,000 crore, which is closer to the liquidation value, which may put off some of the lenders. We are not sure what Tata Steel has bid at this point in time. That is something that we will try and find out over the course of the day. But the lenders have this agreement. It's a common negotiation agreement that they have in place when they will only negotiate further with the highest bidder, whoever the highest bidder is among these two. They will look at various parameters like the upfront cash repayment. They will also look at any equity infusion by the new promoter, as well as any deferred payment that these promoters will pitch in as part of their resolution plan. And on the basis of this, they will determine who the better bidder is, and then only negotiate with that person. They also hold the power to actually scrap the whole process and then call for a rebid if they are unhappy with the kind of bids that have come in. So we will see more action in the coming weeks in this Bhushan Power and Steel. This account owes about 47,000 crore to its financial creditor. So considerably large account to look out for.
The economic survey said there are two macroeconomic vulnerabilities: the fiscal account and the current account. Budget 2018-19 has made the fiscal deficit worse. As against the target of 3.2, you fixed the target at 3.5. And for the next year, as against the target of 3, you fixed the target at 3.3. What I want to ask the government is, while we know the fiscal deficit number for the current year, I want to know what is the current account deficit number for the current year and what is the current account deficit number for the next year.
हमारी सरकार ने पिछले 4 वर्षों में उस वित्तीय अनुशासन का पूर्ण रूप से पालन किया है और आने वाले वर्षों में हम करने वाले हैं. Give the details of the fighting weapon system bought from the Americans and the details and the cost. And Mr. Pranab Mukherjee replies, details of government expenses on purchase of arms and weapon systems are classified in the nature, and it would not be in national interest to divulge them on the floor of the House. Yes. So please ask your party president who has raised this issue to kindly go back to Mr. Pranab Mukherjee and take certain lessons from him. Yes. On national security.
Well, Ayush asked me to meet him at Pinnacle Specialties stall here at the Auto Expo, but all I can see is a tempo traveler. Let's find out what he's talking about. Ayush, what are you doing here? It's a tempo traveler.
Why don't you hop on? This is not a tempo traveler. This, my friend, is what they call a motor home. And it's finally here in India and it's launched today.
I can see fancy sofas, fancy lighting. Where have you got me?
Have a seat. What if I'll show you a couple of things. You're talking about fancy lighting. Well, right now, there's technically no lighting. I put it all on. Well, now you can, well, it's daylight, even in the evening. You want to sleep? Boss, you can sleep.
And you have party lighting as well, I'm sure.
There you go. Right?
Okay, so
let's go into this slightly evening sort of lighting. But what you're sitting on, what do you think it is?
It's a sofa, obviously.
No, it's not a sofa, my friend. Get up. I'll show you something. And there's more stuff on that side as well.
Okay.
Have a look right behind you. If you want any refreshments or anything like that.
So I can see that
it's a well-stocked fridge.
There's a fridge here. It looks like containers here. And this evidently has no other reason why you would have a door here. It's a bathroom.
Well, since you've come to my humble abode, why don't you step in and check out my bedroom, my friend.
So it's a bedroom, yeah, it's pretty cool. There's a sofa there and the sofa here.
Right.
Is there anything about...
But what if you want to sleep in this vehicle? Well, what I'm going to do is I'm going to come on your side and show you something really cool, which is essentially how this sofa right here becomes, well, Alex, a bedroom as well. And it's also for 2 plus, well, a kid as well. Isn't that cool?
That's damn cool.
So the disco lighting I can switch off, but
you should switch it off.
When someone does go to sleep, I might annoy them with that disco lighting.
No, I'm pretty sure that you have similar features inside as well. So let's check it out.
Okay, so if there is...
Why don't we come on, sit with me. So the television as well. And like you were doing inside, I'm going to change the lighting over here. It's evening.
So it's not just me showing
party, relax.
And this is a really cool curved TV.
Yeah.
Which, you know, it's a smart TV, so you can connect it to your Android smartphone, your Apple iPhone.
I'm going to switch.
Kind of cool. Yeah. And what's interesting is to run all of this, Pinnacle Specialty, the guys who made this, well, they take a tempo traveler, truck, anything, and automate it this way. And what you can actually do is, when you're parked, supposing you've gone on a road trip, you can connect this outside to an external power supply. The driver section, if we've not showed you, which you can only talk to them on intercom, and they have a front camera and a reverse camera. Well, those guys on that end, Alex, can be put off to sleep, they can lock the car, and this is a fully functioning house.
I also believe that if you're parked, you can plug it into an external power source.
All of these luxurious
features. Air conditioning facility,
and of course there's also, well, a sunroof over here as well, which I figured out. I'm not that bad, yeah, Alex. There you go.
Oh, that's pretty cool.
And then you can literally, it's pretty quick.
It's pretty quick.
That is
so
a
the
sunroof.
best feature of all, I think, is, which I can see over here, and I'm going to see if it works, is
whoa,
what you can do at the end of a long day at the Auto Expo. You can have a bed right here.
And that's it. So this is Alex's Minds in the Hall. Thanks so much for watching. This is our crib for the day.
But there's lots to talk over about through the course of the day, and you'll find all the live market action on Bloomberg Quint. And there are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The promoters of Fortis Healthcare, Malvinder and Shivinder Singh, have resigned from the directorship of the company. This has come just over a week after the Delhi High Court allowed enforcement of rupees 3,500 crores arbitration award that Daiichi Sankyo had won. And India's largest reinsurer, GIC Re, may retain its first preference in several areas of business if draft regulations proposed by an expert committee get accepted by the insurance regulator. An IRDAI official told Bloomberg Quint, requesting anonymity. But that's all you have that you need to know on today's of trade. Of course, Indian Open's lined up, so don't go anywhere. Keep watching Bloomberg Quint.